Hope you guys are doing very well. Staying green in this market. Not shorting unnecessarily. As I had said before, our trigger 58.30 was long. Obviously, we've been long since down here, 4,800, but we said 55.70, 5,600, 58.30, and you're just trailing stop losses. 59.17 is very strong resistance. The market is trying to break out from this cluster around, let's call it 59.80 to get out at 60.50. Remember, there's guys up here in the nosebleeds at 6,200 that want out, and they're stretching this trend line. What I do is when I have a trend line like this, I set an alert. If it cracks, Trading View will alert me, and then I could pay attention. Hey, are we breaking under, or is the market going to do a little bit of bear trap, and then continue on? Because usually, like I had said during Liberation Day, right here, I had said, guys, this was a bear flag. Don't immediately short. Let it backtest. It backtest, and you guys got a phenomenal short into Liberation Day, and that was basically the last one. I said, guys, just stay long, watch your levels. We had to backtest. Now we still have to see. Don't start front running because you could be buying dips. The market can go another 9 days like it did in April and come up to 60.50 and 6,200 all the way around the end of May and decide that they're going to go into maybe the non-farm payroll numbers in June or CPI. We do have the jobs report. We have TJ Maxx. Any of those can cause a seasonal breakdown that happens this week. But I say first, let something break. Let a trend line crack. Let 59.17. Frankly, we're not bearish unless 58.30 breaks down. And I had said I wanted to see some sort of backtest of 57.36, maybe even 5,600, and then turn this into, again, a double bottom right here. Inverse head and shoulders if we come out. Obviously, we're a little bit in the nosebleed. So what is more likely to happen now is that we come up. If any of you want to be, bears, is that this could be a little bit of a double top, and then we get another double top into, let's say, June seasonality, where the market comes up, breaks down, and then ping pongs. The market could turn this range into just a trading, right? Protected here, it broke over, come up here, and just ping pong until we get some sustainable bad news regarding supply chain, or if the tariffs don't go in, whatever it is. But I always tell people, second quarter of the year has been bullish for 21 straight years. Does it mean every day is green? No. Today was a little bit of a red candle. And again, we could easily come back and test a breakout of 58.30, get liquidity, and keep going, right? Because this whole formation is bullish. It does not matter what the news is. Don't be in a rush to short. I personally have puts with my team into next week because there's a seasonality that comes in this week about cooling off, which I want to take advantage of. Does it mean that I'm uberly short? No, there's nothing wrong with buying some sort of protection against your longs, because my team has longs with Tesla. We have long on Google. We have long on Amazon. We have long on RTX. Countless tickers that we took longs that are not the S&P 500 while we wait for whatever this comes out to be. But as of right now, this cluster was a bull flag that is breaking out. Market makers want to get out before the quote-unquote 90-day pause. So if we get above 60.50, risk on again, very carefully, all the way to 6,200, and that gets everybody out since the election. If we break down 59.17, now you want to start looking at puts for a back test of 58.30, or at least if this trend line breaks down. This is an incredibly steep trend line. Eventually it'll crack when market makers find that there's no more liquidity, nobody else buying. They'll start selling to find, new liquidity. But if you short the breakdown of 59.17, have a hard stop loss, because 58.30 was our catapult. If 58.30 turns into resistance, we're coming home. 57.36, possibly getting some liquidity at 56.61, so on and so forth, because we haven't retested any of this liquidity again. Frankly, we haven't tested any of that. But again, trend is your friend. Risk on only when it makes sense, and keep it light, because we're further away from the bottom of the bull flag. Ideally, I had mentioned that I want to retest. I want fear coming in. I want this trend line to hit or this trend line to hit to take even more longs into the July OPEX, which tends to be the top of the market every single year. So don't be in a rush to short. Be more inclined to take a long at 58.30 risk on, 50, 57.36-ish, so on and so forth. If you want to know how we trade, what tools we use, what levels, what AI, comment course below, and we love to have you join us and be profitable. There's always another trade. Just want to be patient with this market.